What is going on, investors? Hopefully you guys had a great week out there. That is right. It's time to kick back and relax because it is Friday. The weekend is here and the FAANG Stock Recap Show is here, where every Friday we recap all the news for all the major FAANG stocks plus Microsoft and Tesla. We also go over the charts from a technical perspective. Now, I cannot control the news every week, so sometimes the FAANG Stock Recap Show isn't that great because there's not a lot of good news. It's not one of these weeks. This was a great news, big news week for many of these stocks, and we are not going to waste any more of your time. We're going to get into it like we always do. We kick things off with Facebook. Started the week? Really? No way. I was going to say, this chart is off, but it started the week about 2% lower, finished the week at $372. Now, Facebook is eyeing a panel to advise them on election matters, similar to how Facebook has this quote-unquote oversight board that helps them make decisions whenever Facebook doesn't want to make those decisions themselves, which I think is kind of interesting. But this will allow them to maybe, make determinations on advertisements and different types of things. I don't necessarily think this is a bad thing. Facebook, I think if they are smart, will play it right down the middle the best they possibly can. Now, is that easy in today's climate? Is that easy with obviously the feelings that a lot of people have on one side or another? Probably not, but if Facebook is wise, they would try to play this down the middle as closely as they possibly can, and maybe having an oversight board will allow them to do that. Now, Facebook is I love this news, is looking to develop a product that features NFTs, Bitcoin, and things like that. They're coming out with this wallet that is supposed to be called the Novi Digital Wallet, and Facebook says it is ready now, but they're waiting to launch it with their own stable coin, which they're calling the DM. It was formerly known as Libra, and that was a partnership between Facebook and eBay, and I think even like Visa or MasterCard, and it was supposed to be this big thing, and then they decided to shelve it because they realized, just from a regulatory standpoint, probably was going to be too many hurdles, especially all those companies gelling together. Well, Facebook doesn't care. They're going to come out with this thing on their own, and I think this is awesome. I think if you're a Facebook investor, you got to realize this company makes the vast majority of their revenue from people viewing an ad, clicking on an ad, and interacting in an ad. And that's a fantastic business model, and they've made lots of money doing it. But I think over the next 3 or 4 years, we'll see Facebook shift a little bit more to transactional type revenue, okay, where you buying something on Facebook, where they're collecting a commission on an NFT. We've also seen where they're collecting, or they're going to potentially collect commissions on movies, documentaries, shows that are viewed on Facebook. I love this progression. It's not going to happen overnight, but I think it is very interesting to say the least. Now, moving on to Apple. My charts aren't working, but we ended the week at $148 on this one, up just fractionally on Apple. If you followed our technical analysis, we're in a really, really tight box with Apple, and that has not changed over the last week. Now, big news coming out of Apple this week on all fronts, okay? App Store developers win a score in an antitrust commission fight. So there was a class action lawsuit. Apple will be forced to make $100 million payment, which is like $100 to you and I, right? Okay, so it's not that big of a deal from the dollar standpoint. And typically that's the case with these types of lawsuits. But what did hurt Apple to a certain degree is developers will be able to share purchase options. So if you're purchasing something on an app, and let's say it has a recurring payment, so say like a Netflix or something like that, normally you're going to renew that payment through Apple's payment systems, and Apple takes a 30% cut, at least for the first year, on those payments, and then I think it reduces to a certain degree. If you're making under $1 million, then that commission is 15%. This is all through the App Store. Now, what app developers have wanted to do for the longest time was to be able to get you to go to their own website, or maybe their own app or their own platform, and pay for those features outside of the App Store, so they wouldn't have to pay Apple 30%. And it looks like they are going to be able to do that. They're going to be able to send you an email. They're going to be able to send you private communications, however they want to do that, collect payment for something, and then allow you to continue to using the app as you normally would, and they are going to skirt the 30% commission that they would have to pay Apple. I would expect this to be somewhat tangible to Apple's bottom line, but not necessarily overwhelmingly, okay? It is going to hurt their services business, which if you followed our show, that's just such a high margin business for them. And so it will hurt them to a certain degree, but I think this was expected to a certain degree by investors as well. App Store reversals means service revenue as regulators and developers dip in. This is what we just talked about. Their service revenue will likely come under a little bit of pressure. And I say a little bit, they're still going to be able to have lots of transactions through the App Store where they collect a 30% commission. I think some of the larger apps, the more successful apps, will be able to get around this because they have a much deeper connection with their customers. But your regular 99-cent purchase or $1.99 purchase for an app or something like that, Apple's still likely going to collect a certain piece of that. Now, Apple's partner on a program cuts the app tax in half for some publishers. This is on the Apple News side. So if you're like me, I don't mind Apple News. It's actually something that I visit on a daily basis. You load up some topics that you want to get news on, and it kind of feeds it to you. So it's kind of cool, and there's magazines and those types of things in there if you pay for the premium service. Well, now Apple News is offering a 15% commission on qualifying in-app purchases for subscriptions in there. So Apple's already starting to walk back before we obviously had the class action. The Epic Games lawsuit is pending, but we're seeing Apple kind of walk all this starting back because I think Apple kind of sees the writing on the wall, right? That they're not going to be able to charge 30% in perpetuity. And it's been nice up until this point, but I think the writing's on the wall. They're going to have to, at the bare minimum, cut it in half to 15 and then maybe continue to walk these things back because they will likely face anti-competitive monopoly type pressures from regulators. And I think if you're an Apple shareholder, if you're a shareholder of any company, you would much rather the company make a decision than have the government pass a law or regulation be passed to force you to do something. So I think that's what Apple is seeing here, that they'd much rather get out in front of this themselves than have these government and lawmakers get out in front of them. Now, South Korean lawmakers are doing the exact same thing. They're allowing developers to use their own in-app payment systems and not necessarily Apple's or Google's. We're just seeing the writing on the wall for these app stores. They are going to be, they're certainly a profit center still for these companies, but not like what they've been in the past. Now, Tim Cook, talk about profit center. He just took his latest payout. This is like, I think, the last payout in a 10-year cycle. He took home $750 million. $750 million. No wonder they got a big old $50 billion buyback going on in Apple, because Tim Cook's going to sell his shares right into that buyback. So not only is he going to collect $750 million, he's going to use the company money to buy back the shares that he'll sell. So obviously he's not going to sell them all. If I had $750 million, I probably would too. I don't know why the heck he shows up for work every day. You're making $750 million big ones, Tim Cook, lucky guy. Now, Apple's could pass chip cost into higher iPhone 13 prices. So obviously, we're looking for the iPhone 13. I think we're only 2 or 3 weeks away on this one. Major chip manufacturers like TSMC have telegraphed that they are going to raise prices on Apple by about 3 to 5%. And so we'll see if Apple is actually going to pass that cost down onto customers. I remember last year when the phones came out, I don't think they really went up in price much year over year. So it made the iPhone 12 Pro Max, which is the phone I ended up buying, I thought it was a heck of a deal. I was like, wow, this is a pretty nice phone. And if you needed one, it's a pretty, I think I paid $1,200, something in that range. Not that expensive, okay? But if they are having to pass on these costs to customers, we'll see how that affects demand for Apple phones. Now, the tech giant, which we were talking about, Apple, has a $20 billion ad opportunity. This is according to analysts. This is not fact, but they are suggesting that maybe potentially, okay, so you have the App Store tax likely going to be cut in half, or in some cases eliminated, with certain partners being able to go directly to their consumer. But Apple has a massive, massive reach, and they could potentially grow their ad business, which is estimated to be about $2 billion to about $20 billion. Again, this is according to analysts. This is not fact or anything like that, but they support that by saying Amazon had about a $3 billion ad business, and they grew that to over $20 billion. I think the ad synergies at Amazon are a little easier, and it was a little easier for Amazon to boost their ad business. But maybe one way Apple supplements, well, hey, we can't charge you 30% to have your app payment process through your app in our app store. Well, now they're going to charge you a lot of money to maybe get your app to the top of a list or maybe pre-installed on a phone. I don't know. I'm thinking out loud here. I'm just wondering that Apple will likely substitute that loss of revenue that they're going to see through the App Store. They'll substitute it into something else. We'll see what happens there. I just thought this was interesting. I threw this in here. Podcasters can now charge subscribers up to $150 a month on Spotify. You can charge as little as 49 cents and as much as $150 a month for a podcast. I thought that was interesting. I think one of the problems with podcasting is, and unless you had advertisers or a way to make money, it was basically a labor of love. I think we're starting to transition away from that to where now it's kind of a monthly subscription thing to listen to podcasts. And look, I think if somebody makes a podcast that's quality enough, I certainly would be willing to pay for it myself as well. More Apple news. This is like the Apple show. They're reportedly planning a higher-end Mac Mini. So the Mac Mini, I actually used to record the early versions of the show on a Mac Mini, and then I got an iMac to replace that, kind of an all-in-one unit with a monitor and things like that. But they're planning to launch a high-powered Mac Mini. The one on the market right now is run by the in-house chip, the M1 chip, which is a good chip. If you're a student, if you're not doing a lot of video editing, if you're not doing a lot of high processing, high powered stuff, the M1 chip is wonderful. It's probably one of the best computing chips on the market, if not the best, especially for the price that you can get these computers at. But if you're doing a lot of video editing, if you're doing a lot of high processing work, well, that chip leaves a little bit to be desired. But the high-powered Mac Mini is around the corner. Bigger versions of the Mac Pro are around the corner, and eventually the iMac as well. I'm certainly waiting for that. I have a MacBook Pro and an iMac. I will gladly sell those for a little bit of money and buy a new Mac when those come out. Now, unfortunately, my charts did not reset for some reason. Amazon went up about 4%. Remember, the theme on last week's show was buy the dip on Amazon. Well, if you did, you're up about 4%. My boys are thanking me. I took my own advice. So when I give advice on the investor channel, I tend to take it, okay? And so when I said it was a buying opportunity for Amazon, I took it, not in my IRA account, which is my main retirement account, but in my son's account. They each had several $100s in there, and we put it into Amazon. End of the week at $3,350. Amazon and MGM responding to a broader FTC info request. Obviously, if you remember, Amazon bought MGM Holdings, which is not the casino. Don't worry. It's not the Aria. It's not the Vidara. It's not Bellagio. It's not MGM Grand, New York. And the Luxor and the Excalibur. I mean, MGM owns like half of the Las Vegas Strip. They didn't buy that. They bought MGM Holdings, which is James Bond movies, which was a library of a lot of shows. Even The Apprentice, former President Trump's very, very successful show, is even included in that catalog as well. Well, Amazon is buying that catalog in an $8.5 billion deal, but as you know, the new FTC commissioner, Miss Lena Khan, is very, very critical and does not want to see these companies get any more powerful, but we'll see what happens, okay? We'll see what happens with this deal. I don't know what argument you can make that Amazon has a monopoly in the entertainment business, and anybody that would have bought MGM Holdings, like a Netflix, like a Comcast, like a Paramount, okay, they would have all been in the same business as well. So I don't know where this is going. I think it's going to be a little bit of a headache for Amazon. I would anticipate that deal going through just from what I know about their business and other businesses that would have acquired. Now, Netflix started the week at, I don't know what it started the week at, but boy, it went up. We'll talk about that here in a second. From a technical perspective, it's at the top of the range. So you're going to want to focus on Netflix over the coming days. We'll talk about this in the technical segment. Can it break above that, which has not been able to do for like a year now? Or are we going to break down and maybe potentially create buying opportunities lower for Netflix? Either way, it ended the week at $558 per share. Now, what I thought was interesting, the streaming ratings came out and Netflix held the top 10 overall programs, and they held the kind of rerun series, like a Downton Abbey that appeared, I think, originally here in the United States on PBS, and a Chicago Med that was aired on another channel. Well, Netflix buys the rights to those and then reruns those, but the top 10 shows were all essentially, original shows or shows being shown on Netflix. It just shows you the market dominance that Netflix still has and could potentially remain. And I think if I was Amazon, I'd be looking at that and saying, hey, look at this. We bought MGM, but we're not even close to being a top 10 streaming provider, at least from number of watched hours on the platform. Google start of the week at, I'm not sure, I just say that out of habit. Unfortunately, these charts, something happened to them. This one, it looks like it ended up being right. This one started the week at $2,760. Ended the week up, you guessed it, up to $2,880. Google had a really nice week, and it's had really the last 6, 7, 8, 9, 10 months. It's actually been soaring. Alphabet's Wing, I thought this was awesome. So Alphabet's Wing is running like a pilot service in Logan. And so what's happening is, and this is in Logan, Australia. And so they have these delivery drones, and they delivered 10,000 cups of fresh coffee over the past year, as well as 1,200 hot roasted chicken dinners flown out to customers' properties. So it's these little drones, and they're delivering a lot of consumables like coffee and chicken and those types of things. And they are hoping to bring this service to other cities, including New Orleans, Manchester, England, and Florence, Italy. I just think this is the future of logistics. We'll see. Obviously, Google is going to have a play in this. I think Amazon is going to have a play in this. I think numerous companies are going to have a play in this, probably even UPS and FedEx and those types of things. This will help relieve strain on the logistics strain that we're seeing across the United States and the world, frankly. And this will help move goods around potentially faster and I think cheaper as well. I'd like to see that continue. Now, Google's Waymo starts a self-driving taxi service in San Francisco. The difference between this and Phoenix, so they were running a pilot test in Phoenix where they didn't have to have a driver in the car. You could just have nobody. You could just have the robot driving the car. Well, in San Francisco, they're going to require a driver or a person behind the wheel. And so it's self-driving, but it has somebody behind the wheel. So it kind of defeats the purpose. But these are test runs. It's this type of technology and this type of leap into no one driving the car, from someone driving the car to no one, is difficult, okay? Because any accident, whether it hurts somebody, heaven forbid it does hurt somebody, any accident just puts it back, okay? No regulator, no lawmaker wants to be championing something that looks like it's going to be dangerous, especially when it cuts against the grain of status quo of people driving their own cars. This is going to take baby steps, okay? You're not just going to see overnight, all of a sudden, self-driving taxis all over the place, okay? But eventually, I think that technology will come into play, and we'll see what happens there. Now my charts are starting to work. Microsoft started the week at 304, drifted down a little bit to 299. Not a big deal from a technical perspective. We'll talk about that here in a second. Now, Microsoft hired a top executive from cloud rival Amazon. This dude was in place to potentially replace Andy Jassy. So Andy Jassy took over from Jeff Bezos. Jeff Bezos, the founder and CEO of Amazon. He left the company. Obviously, I think he's still a board member, executive chairman, something like that. Well, he's out at CEO. Andy Jassy was the head of AWS, Amazon's cloud computing and its #1 profit center in terms of the corporate profits that it generates. Andy Jassy went from AWS all the way up to the C-suite, to the top of the C-suite, to the CEO. Well, and Microsoft hired a gentleman that was named Charlie Bell, who was listed as somebody that could potentially take over from Andy Jassy for the AWS head. Well, AWS brought back Adam Silpinski, and he was the CEO of Tableau, which was owned by Salesforce. So he came back in, started running AWS. This guy saw the writing on the wall and decided to go to a competitor over at Microsoft. Microsoft will spend $20 billion on cybersecurity over the next 5 years. Probably a good idea. That is quadruple the spend that it has spent recently, and they will make other investments as well. This was after Microsoft and several of these other companies met with President Joe Biden this week on cybersecurity. Moving on to Tesla, started the week lower, $680-something, ended the week at about $711 per share. This one went up nicely, and we'll talk about that from a technical perspective here in a second. Now, Tesla is filing to sell electricity in Texas. Thought this was interesting. Obviously, Tesla has their they bought Solar City or one of those companies a while back, and so they are starting this new subsidiary called Tesla Energy Ventures. And so what they're going to do is they are going to get these big megawatt batteries. They're going to do solar plants and those types of things, and they're going to become a power producer. And I just think broadly about this, whether or not this will move the needle probably a little bit at Tesla. Okay, they're still a relatively young company. They rely almost strictly on selling cars as their revenue model. I think this will bring in some tangible revenue once it's up to scale, to certain kind of scale, because we're talking about the state of Texas. That thing is huge. Okay, but what I think this is cool is I live out here in California. I've got solar on my roof primarily because there's a lot of power grid issues out here in California and a lot of states for that matter. And I didn't want to go without power because, you know, look, I got kids and things like that. I want to be able to feed them and take care of them any way I possibly can, whether or not the government can provide me power. I think the private sector can solve this a heck of a lot better than any politician, Republican or Democrat, could. And so I like to see Tesla step into this along with other companies as well. I think that will be very cool. Now, Elon Musk, who is known for being very colorful on Twitter, said Tesla's beta self-driving software, quote, not good. So they released this beta 9.2 full self-driving. Now, some customers of Tesla cars have paid over $10,000 or $199 a month for this feature that is still in beta mode, but and Tesla is admitting, and Elon Musk specifically is admitting, that it is still not great. Okay, so they've charged customers for a product that is still in development. We don't see a lot of Tesla owners returning their cars or things like that, so they're giving Tesla a lot of leeway on this, probably because the beta mode, think about this, the beta mode of full self-driving on Tesla is still hundreds, probably thousands of miles ahead of anybody else's, okay? And so customers are going to give you leeway when your product is so far head and shoulders above anything, just literally anything out there. I mean, no other car manufacturers really has anything even close to full self-driving like Tesla has. And so customers are willing to give them leeway, and it is showing you that Tesla has some market dominance. And if they can fix any issues that they have there, it will likely give them even more advantages going forward. Now, Tesla's transition to an auto major could include some advertising. This is analyst estimates that they are going to potentially approach 1% of revenues in terms of advertising. Now, someone like GM and Ford, I mean, if you watch a football game this weekend or something like that, they spend 2.5% of revenues on their advertising, and that works out to about $400, literally $400 per car is done in advertising, mainly TV and those types of things. I once took a college course and we had a guest speaker that worked in automobile advertising. That was like something they worked in for a while. And they said, really, the idea behind car advertisements is not to convince you to go out and buy a car. It was actually to convince the people that just bought the car that they made a good decision. Believe that or not, that's what this auto exec that came in and talked. It was like a lecture at one of my marketing classes that I took in college. I thought that was interesting, that the advertising is not necessarily meant to get you to get up off the couch or go that weekend or two weekends later to go buy a car. It's to convince you that if you just bought the Mercedes, now you're seeing an advertisement, it makes you feel warm and fuzzy inside. I thought that was an interesting take and possibly true. Now, moving on to the technical perspective, Facebook in an uptrend. We saw a little bit of a hesitation last week, came down to an area where we thought it's probably a pretty reasonable resting spot, and it has just resumed. This uptrend is still intact with Facebook. Nothing really to see there. I would expect that uptrend to continue. Same thing going on with Apple. Talked about how we busted to the top of the range, and like Facebook, it soared. Google, which we'll look at here in a second, soared once it got to the top of the range. Apple is just chilling up here. Okay, now we're seeing a little bit of clarity on those app store taxes and those types of things. Eventually, we'll get the iPhone release here in a few weeks. We'll see if that can push this stock one way or another. You're looking for a break above 150 on this one, and probably decisively. You're probably looking for 152, 153 to really say, okay, we're out of consolidation mode and we're going up. A break down below 145 would be bearish, and I think we could easily come down to 137, 138 on this one. I'll be monitoring Apple in the coming weeks because, again, we have the App Store stuff starting to take hold. We have the new iPhones coming out. Maybe some potentially other new products that could swing this stock one way or another. If you got balls of steel and you play the breakout on this one, this can be a buying opportunity for Apple. Now, moving on to Amazon, we talked about how when we broke down below 3,300, it brought us into a box where there'd been a lot of demand for Amazon shares for over a year. I mean, we're dating back to July of last year. So over a year, a lot of demand for Amazon shares, quite frankly, between 3,000 and 3,300, a lot of demand there, and that demand stepped in, and this stock did tick up over the last week. I was somebody that bought in here. Now, it doesn't mean that if you miss this week that the dip is not over. I fully expect this stock to hang out right here at 3,350, and it's either going to walk back up here to 3,500, or it's going to get rejected here and go lower back towards 3,200 again. You get any opportunity again down here, and I'm nibbling this because 3,200, quite frankly, is the top of a range, of a lower range. Okay, I'd love to get this one at basically 3,000. I'd love to get it even farther down below that at 2,900, but you've seen over the last year, you've literally had like 6 days to get Amazon below 3,000. So if you get that opportunity, that's where you take some chips and you move them into the table because you've got a really good hand. You've got a great advantage. Up here, you've got a good hand. You've got ace king. You've got a pair of nines. You've got jack queen suited. Something like that. You've got a playable hand up here, and I would play it with Amazon. I wouldn't push all my chips into the table here, but if we see Amazon dip further down, I think you've got an opportunity. Now, when we talked about Netflix, this thing's at the top of the range, and it wants to break out. It wants to go one way or another. We are at the top of the range at $560 on Netflix, but you've seen over the last year, this chart goes back, at least this sideways consolidation goes back to last year. It has spent like 6 days over 560. So this is not, and I repeat, not a day or a week to buy Netflix. But what you're looking for is a break above that, okay? Break above, really, I think you'd want to get above 580 on this one. So it really has got to go, okay? It's got to go another 20 bucks on this one till I'd really say, hey, this one's on the breakout. And now all of a sudden, instead of being resistance at 560 is now the support because it'll likely go up and come back down. We saw that with Apple, right? We came up and now we're bouncing on this level of 145 was pretty hard level of resistance. Once you broke out of it, now it's support. Same type of thing with Netflix. If we break out above 560, we could run, and we could run hard. But if we come back down, we should see some support at 560. If 560 acts as some support, that is where I would step in. Your timing on 560 is so key. Okay, right now you're just gambling. Okay, you might as well go to the MGM and gamble a little bit if you're willing to buy in here at 560 to play the run up. I'd much rather see Netflix run up and then come back down and retest 560, that would be where I'd be like, okay, 560 is a buying opportunity. So I hope that made a little sense, that 560 is a buying opportunity, but it just depends on where it is in the life cycle. Now that we're hitting our head up against it, the likelihood, if you look back over the past year, this stock's going to get rejected. It's probably going to come all the way down to 480, and that's your buying opportunity. But if we can break above on some really good volume and some good momentum, and then come back down and retest 560, that can be your spot. Now, moving on to Google, as you can imagine, I mean, this is just incredible. Look at this. This is why we love the breakouts, okay? That's why we're really watching Apple. Netflix is on watch as well, and you see evidence of here with Facebook as well. It was sideways consolidated, broke, back tested, and then boom, ran. And then look at Google. It is just the perfect example of once you break out, it is pretty much party time. And that is what Google has been doing. Same thing with Microsoft. Broke ahead, sideways consolidated, just like Apple has been doing. I mean, this chart right here up until this point looks just like Apple. We broke above previous highs, came back, consolidated for like a month basically, and then boom. And so that's kind of what I'm looking for with Apple, is if we can break above that previous area, then that's what we're looking for with Microsoft. Same thing here. We're way up here with Microsoft. That is in an uptrend, and it's in an uptrend until it's not, okay? Now, Tesla, probably the most interesting from a technical perspective, okay? So I had this line in here, and because we were in a downtrend, that downtrend is gone because we had a high, lower highs, came back up here, made a little bit of a higher high, but it didn't surpass here. But now we've got a high, higher high, higher high. So now we are in an uptrend now with Tesla. It's not a dramatic one, but we are now in this type of channel upwards, okay? And as long as you don't break below the channel, and not really break below the channel, because I showed you with Facebook, okay, we were in an uptrend, we kind of broke below it, but that's not that big of a deal, okay? What you're looking for on Tesla is actually, you're looking for this not to break below the previous lows. So in this case on Tesla, I'd say probably about right here. So about $650 per share. Right now it's at $712. So as long as Tesla stays above the 650 range, this thing is in an uptrend and it's looking good. It's not a steep uptrend. It's not like Google. It's not even like a Facebook or a Microsoft to that matter, or even in the shorter term like a Netflix, but it is in an uptrend. And you're looking on the very, very bullish side, you're looking for it to get above 750. You get above 750 on this one, I think it's almost, I don't want to say guaranteed, but I think you have a high probability of coming back up into the $850, $900 range on this one. I would expect, quite frankly, here's what I would expect with Tesla. I think we're going to slowly grind our way up to 750, and then we're going to have decision time with Tesla. Can it break above this previous high here? Because everybody from a technical perspective is going to be looking at the exact same thing. If it can break above 750, it's going to go to 850, potentially 9. If it gets rejected here at 750, I tell you what, you can come back down here and retest 620, maybe even 600, maybe even potentially 550 on this one. So we'll see what happens with Tesla in the coming days ahead. But I think Netflix is probably the one that we're watching the most closely over the next week. See if it can break out. If it doesn't, it's going to get rejected and create lower prices. Same thing with Amazon. Can it walk to the top of our range to 3,500? I don't expect it to do that next week. That would be a pretty solid move, even for a stock like this. But if it gets rejected here, we come back down into this area. I think Amazon is still potentially a buying opportunity as well. That was the FAANG Stock Recap Show. Hopefully, you guys have a great week and a great weekend. I will see you again next week. Until then, good luck with your investments.